Buying a home is probably the largest purchase that you'll ever make in your life, and there is a lot to know. The home buying process can be overwhelming at first, but this step-by-step guide on everything you need to know about buying a house in Vancouver, BC will help you to understand where to start and the overview of the process. Whether you're buying a condo, a townhome, an apartment, or a house, these steps apply to any residential property you may be buying in Vancouver. Stick around to make sure you don't miss the most forgotten step. It's actually quite early on in the process. Purchasing a home is a huge decision that can be both exciting and stressful. It is one of the biggest financial purchases that people will ever make, and in addition to the investment itself, you also have to find a place you'll be happy to live in, at least for a few years. Before you start the search for your home, you'll have to figure out if you're really ready to own a home with a few initial questions. What can I afford? What are my options? What do I need in a home? Am I okay with the risks? Am I ready for the responsibility of home ownership? Knowing what is involved in the purchase of a home is an essential first step in the home buying process. Find your realtor. Having a reliable realtor to guide you through the home buying process is an absolute necessity. The agent is there to assist you in the process, help to guide you in the right direction, show you homes, provide insight, write an offer for you that protects you, and assist you throughout the completion and move-in processes. There are a variety of services your realtor should provide you with, some of the biggest ones being helping you figure out what your budget is, providing insight about properties and financing sources, determining the market value of a property so you don't overpay, arranging showings, writing your offer, and recommending subject terms to ensure you are protected, and facilitating the steps between accepted offer and completion. Find your mortgage broker. Before everything else, you need to get pre-approved and pre-qualified to determine your budget. This starts with finding the right mortgage broker. Your realtor will have a network of mortgage brokers that past clients have used, and your friends, family, and bank will also likely have recommendations. Your mortgage broker will be able to help you get pre-approved and determine your budget based on your income and other factors, as well as search for the best rate and terms for you. Pre-approval process, determine your budget. A mortgage pre-approval is when your mortgage broker has sent your basic financial information, such as income, credit scores, debt, to the lender for review. From there, the lender will determine the maximum amount of money they'll lend you, along with an estimated interest rate and monthly mortgage payment. Many sellers nowadays will not even consider an offer from a buyer who is not pre-approved. Pre-approval assures the sellers that you are motivated and ready, as well as certain of your affordability, so this doesn't cause issues in the deal down the road. Nowadays, particularly because the market is so competitive here in Vancouver, realtors will want you to have your pre-approval in place even before taking you out to show you any properties. If a buyer is not pre-approved, they will not be able to make an offer that will be accepted, and it is a waste of time for both parties, as homes don't stay on the market very long by the time the buyer gets pre-approved after seeing a property. That home will more than likely be sold long before the buyer is even able to make an offer. Confirm your down payment. During the pre-approval process, you will need to confirm your down payment and how much you'll be putting down. Minimum down payment rules in BC are 5% for properties for the portion of the purchase price under $500,000, 10% of the portion of the purchase price above $500,000, but less than $1 million. Then it goes up to 20% on the purchase price for properties valued above $1 million. The amount the bank is willing to lend you plus your down payment will be the maximum purchase price that you can afford. There are various sources available for your down payment, which include RRSP withdrawal, a gift from your family, or borrowed funds from a line of credit. Know your buying costs, cost to close. To complete the transfer of title, there are a number of costs in addition to the purchase price that you will need to be ready for. You'll need to be careful about your spending habits in this time period, and be sure not to make any big life changes like buying a car or quitting your job. You don't want any of this to affect your home purchase. In short, some costs associated with the sub-removal period and closing are home inspection fees. One of the common subjects to put in an offer is a home inspection clause. Therefore, this buyer cost typically takes place during the sub-removal phase. A home inspector will come and inspect the property as well as provide a report on the condition of the home. The fees range depending on the size of the home and the complexity of the inspection. Appraisal fee. If you need a mortgage to purchase your new home, it is common for a lender to hire an appraiser to appraise the value of the property as part of their mortgage commitment. This is a part of your subject to financing clause, and therefore the appraisal is typically done during that time. Notary or lawyer's fees. These fees range based on the complexity of the transaction and whether or not they will need to order additional documents. Survey certificate. Property boundaries cannot usually be determined without an up-to-date survey certificate. A survey is prepared by a land surveyor, and the cost varies depending on the region and the size of the property. If the previous owners can't provide the certificate, you'll have to pay for a surveyor's fee. Property transfer tax. The property transfer tax is calculated as 1% on the first $200,000 and 2% on the balance up to $2 million, and 3% on the portion of fair market value greater than $2 million, and if the property is residential, a further 2% of the portion of the fair market value greater than $3 million. If your purchase price is less than $500,000 and you are a first-time home buyer, that fits the exemption requirements. Then you're exempt from this tax. Property tax and utilities adjustments. All homes pay a property tax and utility fees once a year. Depending on whether or not the seller has already paid these taxes, you may have to pay for a portion of the time that you are living in the house. This can often be a large sum and is calculated based on the annual cost of tax utilities and when you take possession of the property. It is important that you have your realtor or notary calculate this for you in advance. Maintenance fees. If you're purchasing a condo, a townhome, or any type of strata, then you'll need to pay the difference in the monthly strata maintenance fee for the time that you are living in the home. In many cases, there's a move-in fee for strata properties. Many stratas charge a one-time move-in fee, and your realtor should verify the move-in process and whether a fee is applicable when purchasing. This typically can be found in the bylaws section of the strata documents. Title insurance. Many lenders require title insurance before they will advance mortgage funds. Title insurance may insure the lender and the owner in the event of defects in title that are not readily apparent. Goods and services tax, the GST. The GST in a new home is 5% of the purchase price. If the home you are purchasing is newly built and priced up to $350,000, a GST rebate equivalent to 36% of the GST paid is available. There is a partial rebate on new homes priced up to $450,000. Buyers also pay the GST on fees for service from appraisers, home inspectors, lawyers, or notaries. Be aware that there are many additional costs. For example, foreign buyer tax for Metro Vancouver and Fraser Valley, which is an additional property transfer tax in addition to the 20% of the fair market value, which is charged if your title is transferred to a foreign entity. Also be aware of potential tax exemptions such as first-time home buyer property transfer tax exemption, GST new home rebate, and newly built home exemption. Knowing these exemption limits is very important as a first-time buyer. Research or ask your realtor about these exemptions before starting your home search so you can have a proper idea of what your budget really is. Continuing on from the main topic of the home buying process, next up is making your wants versus needs list. Prioritize wants and needs. All your wants may not be realistic within your budget, so it's important to narrow down exactly what you absolutely need. Everything else included after your needs will just be a bonus. Consider your list when you go to check out homes. It can be difficult not to get caught up in the fancy details such as new countertops and hardwood flooring, but at the end of the day, you should really be paying attention to structure, price, and dates. Check out homes. Once you've narrowed down a very precise list of needs and wants, it's time to go out and search for that new home. You'll be able to attend some open houses as well as private showings arranged by your realtor. Narrowing the search. After seeing some homes in person, you should be able to narrow down exactly what you like and what you don't like. From there, your realtor should create a comparative market analysis, or what they call a CMA, for you to determine the market value of your favorite picks. The process of finding the right home can take anywhere from a day to more than a year. Take your time, but make sure you listen to advice from your realtor so you don't miss out. Writing an offer. Once you've found that perfect home that you want to purchase, the next step is to write an offer with a contract of purchase and sale. Your realtor will be the one that can make recommendations on what to include in the offer to help protect you, as well as help to estimate market value to make sure that you don't overpay. In a hot market, there may be an exact date when the seller is reviewing offers, and in this case, you may be encountering a multiple offer scenario, which becomes more competitive. However, if the home has been on the market for a long time, they may be reviewing offers on a first-come, first-served basis. Things get really competitive in a hot market with multiple offers. But it's your realtor's job to determine what subjects you absolutely need to have in your contract. Begin subject removal. Once the offer has been agreed upon, a subject removal date comes next. Subject removal is there for the buyer to perform due diligence on the property as well as ensure their finances are in order prior to handing in the deposit. During the subject removal period, you and your realtor are working actively to perform due diligence on the property with regards to the included subjects. This may include tasks like getting financing in order, reading through strata documents, coordinating with the home inspector, reviewing the property documents, and obtaining home insurance. If you are satisfied with all of your subjects before the subject removal date, then you will proceed and provide the deposit. If you're not satisfied with the results of the subjects, then you have the option to collapse this transaction and walk away. Remove subjects and provide deposit. If you remove subjects, then you will need to provide the deposit to your realtor within 24 to 48 hours of subject removal, unless otherwise agreed to in the contract. Choosing a notary or a lawyer. Anyone buying or selling a home needs a notary or a lawyer to represent them in their real estate transaction. They will be the ones to draft up the statement of adjustments for you, in which you will know how much money is due upon completion and what the exact closing costs are to complete. In the case that something goes wrong, they will be your representation to ensure things are smoothed out. Closing and completion. Prior to closing, your realtor will instruct their conveyancing team to send your notary or lawyer all the documents that they need to start your file and work towards completion. Your lawyer or notary should have already calculated how much money you'll need to bring prior to closing in order to complete the transaction. You will be instructed to bring them a bank draft or certified check to cover the balance of any funds necessary to close. The completion process requires a fair amount of paperwork to go through, and you will need to sign off on all documents required in order to complete the transfer. Moving in, the big day, your possession day, you'll have determined in your contract of purchase and sale, along with the time that you should receive the keys. Make sure that your realtor reviews this with you and tells you exactly when you're able to move in so that you can schedule your moving company. The seller should already have cleaned the house, but a second clean before you start moving all of your furniture in never hurts. Getting settled in. At this point, your new home is finally yours. You can start personalizing it to really make it your own. Hang up your framed photos and paintings, change the locks, plug in your TV, and lay down carpeting. This has been a general overview of the home buying process in Vancouver. However, as I'm sure you can imagine, there are a lot more fine details to get into that we could talk about all day. If you're thinking about buying a home in Vancouver, give me a call and I'd be more than happy to dive into the nitty-gritty details with you. It's a long and very important process, so the number one rule is that you have an agent with market knowledge, accountability, and negotiating skills working with you throughout the home search. So that was a brief overview of the things you should do. Check out this video here on the things that you should not do. Thanks very much for watching. I hope you have an awesome day. Bye for now.